it there, not a really grand idea because trend will be up, momentum will be up. You want to look for a topping formation before that happens. And that's going to, what does a topping formation look like? I fail to hold higher. I reach down into support. I bounce and I don't make a new high. That tells me I'm going to rotate into frontline support. All right. So as we come in to the open here, I'll talk to you a little bit about what it is that I like to do from an hourly formation. When the chart begins, I love to measure the opening range instead of the regular trading hours. I like to look at that opening range in the Globex event. If it's very narrow, it usually breaks on both sides before it resolves, usually in the direction of trend. Maybe so, maybe no.
Order rejected.
Yes. And I have to get better at
the market is open.
The stream. So I'll go through a topic, and then on one of my other systems, I have
order filled.
The stream set up here, and I should be better, right? Oh, here we are. We've got ourselves. We gapped open down, but notice trend is up. Super trend says up. Our regular 21 says up, and we've got a support action here and right here. So if you're thinking to yourself, okay, I want to have a quick snap trade, you've got very little risk if you're thinking about going along from this perspective, because your stop is literally right here at these wicks. You could also use the super trend and make that your stop, right? And so that number's 5909.
Order filled.
We're trading within trend.
Order filled.
You could take along easily. You know, I don't normally do that, but, you know, let's...
Order market is open.
Okay, and so we take along, and our stop is where it's going to be. The price action is either going to go up into resistance or it's going to break down. But what we know is that our stop is very defined. It's very defined here. We're looking at the range of motion, sideways to up. And so we expect buyers to come in here because we've got a trend that's upward and a moving average that's also upward. The one fly in the ointment is momentum. And it's moving down, but it's above zero. So it's sort of a wishy-washy kind of space that you can go into. Okay, so there we have it. We'll see how it goes from this perspective. I will tell you, I don't like to trade in. I like for the first hour to be done before I get into any kind of trade event. I can see that buyers came right off of that low, but they really aren't being super excited about anything, right? And as a matter of fact, the support ledge might be the gap fill here. So we'll see what gives. Otherwise, it's going to stop us out, and it is what it is. So what I want to do is actively trade that space and let you go, okay, this is really what we're looking at here. Now, what we expect to see in this market is we have no idea which way price action is going to go. Right? We really do not. And I probably have my stop a little bit too tight there. Key things for us to realize is that we're right inside of the move. And if we're trading, what we want to do is make sure that, one, our risk is defined, and two, we're going to be able to continue in the move with risk defined into what's going on for the rest of the day. Ultimately, I like to wait for this first hour to do its thing. And I do think I just had the stop too short, too tight. But this is what we're looking at. Up here, movement is going to be in good shape to the upside. And then down here, not so much. What are we looking at? Old resistance, new support. And so risk management for long formations are really going to be what you want to go after, right? And so I still think this is long. I still think this is long for now. All right, I have no idea what is going to be on the agenda for the week. A tweet could send us in any direction, but all roads appear to be pointing to the north. All right, if you want to use wave structure, we just
Order
had a new
filled.
wave event. And so you go swing high. There's the swing low over here. Swing low. Look at that. This happens so much. It comes right into the 50 and begins to bounce. This is one of the most powerful mechanical motions that I've seen in the market lately. And it really is because volatility is so crazy right now that traders are leaning on the math more than anything else. They're leaning on, okay, if I rotate 3 standard deviations out here, I should do this. If I come back to the 50% of the wave, I should do this. And so you're seeing a lot of clean mechanical flow. Here's what I want to talk to you about for implied volatility moves. Simply because the option chains are saying, listen, when we get up here, we're likely to move down. Here's what could happen. And this is commonly termed a gamma squeeze. So what happens is, let's say a lot of people have sold options up here, and the traders buy into the market and run it up here into that area where they've sold those calls, right? Which means that the dealer, the guy who's got the portfolio on the back end that's bought the calls, is in great shape. But the other side of that trade, because they don't want to give up that edge, they have to buy the instrument in the direction of the move, which causes the price action to rotate up. And it continues to be this feedback loop where they sell some more and then people buy some more and sell some more and people buy some more, and price action continues to rotate up. These are not lines where you can go, hey, I'm going to short it at 60.41. That's not how to use implied volatility moves. A lot of people do that, but it's not the most wise thing to do unless you are scalping and you're ready to get out the second that it moves 3 to 4 points off of that edge. So you could do it, but you'd really want to manage your risk. All right, so rotation continuing up. Stop just a little too tight there, and that's certainly something I should have paid attention to, simply because, it's very clear. Old resistance, new support. I should have moved my stop down. But neither here nor there. It happens in trading. We can't. Here's something I really think is important. When you're a trader and you're really trying to get it, one of the things that we do is we study, plan, whatever. And then when we get into the trade and it doesn't work, it just sends us either into a fit of fury or a fit of depression. One of those, because it didn't work out. And here's the thing. Trades don't work out all the time. If you're looking at people who trade over and over and over again and stay alive in the market, the number one thing they're doing is managing their risk. That's number one. Because at any place, in any time, the market could do anything it wants to, and we'd be upside down in a trade. The goal is don't lose more than might give you a little bit of a tizzy, right? You don't want your headspace to get all kooky by fading those motions. All right, so that's the basis of the market structure event on the 4-hour chart. You don't want to get these too awfully tight together. because then it'll be line after line, jumble after jumble, and it's just not worth it. Okay? Your goal is market structure normally holds at 50. We've got a 21 simple moving average on the 4-hour chart, also telling us it's a nice hold space. Super trend is up. You're in good shape, right? You go to the 1 hour, it's telling us the same thing. Comes into the 50, super trend is up. Moving average, what do they want to do? They want to recapture that moving average, right? They're trying to fill the gap between these areas. So what would I normally do? I'll wait until the first hour of trading is over and then I measure it. And if you watch my morning videos that I put up, you'll see that I have, long action, short action, and that sort of thing. It's always on the 1 hour measurement. And what we hope for is a nice range. Something, see, this is Friday's range for the Globex Open. It is so tiny. Thursday night, right now, it's already bigger than it was on Thursday night at the Globex Open. So we've got some good range. We just have to see how it holds out and what we can do there. But everything says buy the dip in the constructs that I am looking at, right? With your deeper stops being closer to where the trend changes shape right here. And the reason I put the super trend on is because it matches market structure. It's just one of those things that matches market structure. All right, let's go to the NQ. All right, we're going to start with the week. It's got the implied volatility moves. The range of motion is, again, the wider edge